Johnny here, and I wanted to do a video outside today. I just finished eating dinner and it is just beautiful out here. It is absolutely gorgeous out here in the mountains. Sitting behind a tree here. Look at that view though. Isn't that beautiful? Anyways, wanted to go over a couple of my stocks today with you guys just to do it. Get used to doing more videos more frequently. As you can see, I'm only up about $2.30 today in the market, but not too bad. We had a dip here early morning, 10 a.m. I was down about $7.50, almost 1% of my account. Not too bad. And just wanted to go over some of those stocks with you. All right, so let's see. One of the stocks that I've actually had for quite some time is GLAD, or Gladstone Capital. Now, right now, this company is at $6.66. And if you look at the 3-month chart, it did suffer a little bit due to, what's going on in the world right now. But as you can see, in the past year, it has been pretty steady in about the $10 mark, $9 mark. And in 5 years, it's showing some volatility, $7 up to $9, down to about $7 again. So that seems about normal for this company. Now, for everyone who doesn't know what this company is a development company for businesses. It invests in debt and equity securities consisting primarily of secured first and second lien term loans to lower middle market businesses. They've been around since 2001. They have 70 employees and they're headquartered in Virginia. Their CEO currently is David J. Gladstone. Let's look over some of the dividend history here. As you can see, I actually have a pending dividend right now for May 29th. 10 shares, it's going to give me 65 cents. What else about this company? Their Q3 earnings is at a steady 21 cents per share, which isn't too bad. I like that they're consistent with their earnings per share. Some of their statistics, they have had a 52-week low of $4 and a 52-week high of $10.69. Average volume is around 190,000. And their market cap is $207 million. So they definitely have a lot of money to play with. Their dividend yield right now is at 11.8%, which isn't bad. I believe before everything happened and the price dropped, it was sitting right around, I believe, 8 or 9%. And this is just one of those companies that I'm going to be holding on to and adding more positions in the future. All right. Another company here. Gain. It's along the same lines as Gladstone Investment. And basically this fund is a closed-in, non-diversified management investment company. Its investment objectives is to achieve and grow current income by investing in debt securities of established businesses that will provide stable earnings and cash flow to pay expenses. Now, this company was founded in 2005, has 70 employees, and the CEO is also David J. Gladstone. Now, these two companies are great to have in your portfolio. The earnings per share on this is 19 cents per share. Not too bad. Still positive. Their dividend yield is 7.83%. Their 52-week low was 643, and their 52-week high was 1534. I do have an upcoming dividend for them as well of 35 cents because I only own 5 shares. Now, I have 10 shares of this company now at an average cost of $10.65. and it's at 1074 today. Now, if we look at the 1-year chart, you can see it had a huge dip here at $6.51. They were down 43% for the year due to what's going on in the world today. But overall, as you can see, their 5-year growth is substantially way better than a small decline that they've had in the previous couple months, going from $7 to $9 to $12, all the way up to $14. So this is another company that I'm very glad, no pun intended on that, to own, and it'll produce a lot of gains. Pun not intended on that either. Some other companies that I have that I think are worth mentioning on this video right now would be O, which is Realty Income. They're at $52.15 right now. As you can see on the year chart, they were steady holding $79, $73, $80, $71. They had a good price point. As you can see, in 5 years, they've definitely gone up quite a bit, which is awesome. I'm up $3.22. Got a little bit of traffic tonight at 7 o'clock, not too bad. Must be one of the neighbors out yonder. One of the other establishments out there. Anyways, their 5-year is pretty substantial as well, showing a low of 46, a high of 69, and then going back down to about $49, $50. And then you see they got up to $82. Now, I've actually had this position for quite some time, in and out. Right now, I'm up $3.22 on one position. Let's go over some of the statistics. Real quick drink. Realty Income Corp is a real estate company which engages in generating dependable monthly cash dividends from a consistent and predictable level of cash flow from operations. Now, basically, it is a mortgage. It's basically a real estate company, or like a REIT. They have a ton of properties. If you go to orealty.com, I believe, it shows you all their different holdings and positions. They've been around since 1969, which is a plus. They have just shy of 200 employees. They're located in California, and the CEO is Summit Roy. Now, I've had quite a bit of dividends from this since April 17th, 2018. I've gotten 22 cents, 22 cents, 23 cents, and they are monthly dividends, but there are points where I've sold and stopped getting those monthly dividends. Now they're still riding on 23 cents a dividend, and they should resume that here pretty soon. Oh. And a little bit more statistics here. Their 52-week low was at $38. Their 52-week high was at $84.92, which is amazing. Their dividend yield currently is 5.43%, and they have a PE ratio of around 35. Their average volume is 3 million, and their market cap is just shy of $18 billion. That's with the B. So this is a huge company. 19 analysts are rating this at a 47% buy and a 53% hold. If you guys want to pause this video and you want to read more about what the bulls are saying, you can. And then, of course, if you want to pause this video and read what the bears have to say, you're more than welcome. But overall, I really like this company. Their earnings per share are just steadily increasing, and I love positive earnings per share. I will never invest in a company that has negative earnings or is declining in their 5-year chart. I will only invest in companies that are going up. So that's just a couple of the companies that I really enjoy owning. As you can see, I do have quite a bit of others. I believe I am now up to 25 or 26 companies that I now own. And if you want to pause the video at any point in time, you're more than welcome to. But as you can see, guys, let me show you my growth. I'm up $16 for the week, $30 for the month. Still down slightly, $30 due to what's going on in the world today. But for the year chart, I'm still up $2, which isn't bad. Slowly making those gains back. And overall, guys, since August 11th, 2017, I am up 133%, or $445. Now, I've gotten to this point because of REITs. They pay 90% of their income in dividends to their shareholders. I love REITs for this reason, because I can use that money and reinvest it to buy more stocks. I also diversify my account substantially, and if at any point I have total returns down more than like 10%, I will sell that position if it doesn't look like it's going to come back. Now, this is my total percent change from owning the stocks, and as you can see, I have a lot more green than I do red. Even NRZ is up 19% alone on their one stock. And I have a couple down. STWE, I'm up 11%. AG&C, 8%. Main, 12%. AN, 14%. O, almost 7%. And as you can see, I have more green, more positive than negative. And because REITs always come back, they always bounce back for the most part. And because of that, I invest. Now, one of the things Robinhood doesn't show is the dividends that are paid out. They don't put that in any form of percentage or in any type of, basically don't put it in as a profit. You get paid that out in cash, so then you could use that cash to buy more stocks. Now, what I do is when it dips, say GLAD goes down 5% tomorrow, and it's below or equal to my position now, then I will buy more shares. My average cost right now is at $6.34, but we're up to $6.66. So say it goes down 5%, then I will buy more positions. So when it does go up, I have a more positive and a more profitable position in that company. So just a little bit of what my portfolio looks like, as well as some tips and tricks and why I like REITs and the whole spiel. And if you guys like this video, I'd love it if you'd smash that like button. It really helps people to find this video. And feel free to share it with your friends and family. Alright guys, have a great night. Stay inside and stay safe.